Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening of, where are we now? We're on Thursday, September 12th, 2024. All right, my friends, as we look at the markets, continuation run to the upside. Metals broke out to the upside all over the board. Did I not tell you yesterday that one of the things I did on the morning of Wednesday, I was pointing out to my subscribers that many of the different trading techniques saw their markets go down to the Bollinger Band, key moving averages. For many markets, that's often, if you put a sign in of where could a support point be if you've been short, a cover point. And I made it very clear. I didn't think that they turned around and went long there. Those that did, congratulations, but I don't think most did. I think they got out of shorts, and that's a big win given where the market's gone. The dollar's been under selling pressure against a host of the currencies, and you'll notice I'm now into the December currencies, looking to come out of the dollar as soon as I take my traders out of the SEP dollar and put them into the NOV. And yes, I have positions in that, and that is why. I've also moved you into the November crude oil as of tonight, so I think it's time that you look at that. I looked at where the volume and open interest is moving, so we're moving there. Was I surprised today to see that the energy's #1 rallied? Not at all. That I expected. But I was surprised that they held in the second part of the day, because the event by Monday morning should be a non-event. In other words, I don't see the damage on the early reports from the Hurricane Francine doing damage to the oil, natural gas, and refinery facilities. I could be wrong, but we'll see. So if this event's off of that, could be off something else to rally. I don't know what it is, because I don't see anything else to rally off of. Then we'll see where that's at in the morning. Bonds and notes, they're up again tonight. All right. Well, you know next week is when the Fed's going to make its move, and the battleground is still out there. Now, I happen to think the Fed's going to go for 25 points, but I understand the argument for 50 if the Fed wants to get ahead of the curve. It depends what they want to do. Either number is okay. 50 may spook the market into thinking the Fed thinks it's seriously behind the curve. I don't know that they'd give him credit for saying the Fed wants to get ahead of the curve. You got to flip it. It's a difficult thing there. In terms of action, in terms of news tomorrow, you get the August import-export price index at 7:30. They're looking for a decline on import prices. Well, think about it. Energy's down. Most things we get from China have been falling in price as well. So that's coming down. And obviously, whatever we're getting out of Canada has been falling in price. So, you know, they're a big partner, as is Mexico. University of Michigan preliminary, and the word is preliminary, consumer sentiment comes out. What has all this done to the consumer? Was this in a timely manner? We'll find out what they think of all this coming out. I don't think the debate is in there. It happened, I would assume, too far after the survey was taken, but I could be wrong. I don't think I am. All right, so let's look at the chart action and see what we got, but I think you'd agree that the gold market, I've been looking for 2,600. I'm not too far off of it now. It's rallied about $50 this week. When we take a look at the S&P so far, as I had been talking to you, the 18-day average of closes, not day, weekly, I'm sorry, this is a weekly chart, 18-week average of closes has held. So the pullbacks to it each time have held. Certainly if the market all of a sudden reverses through all this and comes down, we have to rethink what this is. But so far, this September snap in the market is just proving to be a September snap. It doesn't have to be a crash. If I'm correct, the average, and I have to do a little more work, and I think I read this, was about a 0.5 percentage point. So it's not that the market has to break a lot. You get some that they do. You get in October some big breaks. This is the week time frame. I remember, what was it, 87, the monster break that happened. We've come back in the S&P, but you're not up at the highs. This is a bounce in a market that stepped down, but give it credit. For the near term, you have higher lows and higher highs with the action. The market today is the first day over the 18-day average. Now, you know what I think happens when you come down and you come back up? Often, it's all I can tell you as a chartist, is the often pattern. You'll now fight a battle here. You don't just pick up and run. Could it? Anything can happen. On the way down, was I adamant that I thought you'd find support there? And if you look at the Bollinger Band, it was right with it. So if you go back and you look at 3 or 4 of the videos, you go, that's what he was saying. And that's where the market is. So you learn from these things. All right. So you're no longer in the bear camp. You're in the bull camp. The risk is way too big. Let's assume you want to buy it right here at 55.79, the 18-day average. Do you really think you want to put a stop under 54.12? You might, so enjoy yourself. Given that the market is not overbought yet, that might be the right thing. Would I tell my clients to do such? I think that risk is pretty big. I thought that you'd get up on this rally and fight a battle in the NASDAQ at the 18 and the 100 day. I don't think you've gotten away from that. I think the battle is ongoing. Again, the trend turned up again. So you've ended this cycle down. That's the first important thing. And what did I say yesterday? Believe me, I go there and say, I said, you've ended this down cycle. And now, if you wanted to go up to the 18-day average, that's your next battleground. That's where I think you're at. Same identical thing in the Dow. Now, I put the high in the Dow here because it's the closest market that can run for that. It's at 41,681, so it's in round figures, 535 points or so from that. So it's very, very interesting day that it could have there. We'll see what it does, all right? When we take a look at the Russell, it's the weakest. It found its support. It stepped out of its downtrend yesterday, just hasn't been able to get up to the 18-day average. So still not acting as a market leader. We then look at the 10-year notes and so on, and do we have an embedded reading? Well, both numbers today were over 80. I think you'd agree. This is, let's come back here. I don't understand why that is keeping and saying September 13th. That is wrong. Nothing wrong with the chart action. You got to forget the date, all right? The dates are right. They're not going, when I go back in time is what I'm saying, I didn't see it changing for me. And I'm on a beta version because of the problems we had earlier in the week. It's going to stay like that. So let me get back to it and then we can talk about it. I don't want to leave you high and dry. This is the action for September 13th. I was hoping that when I went back, and it's not even moving on it now, when I went back it would show you the right date. But it's trying to embed, but I don't believe it has done so. Certainly not done so in the 5-year note. So you're an overbought market that hit the upper Bollinger Band trying to come back a little bit. When we get to the dollar index, big time action right now. So this is where you've got to be paying attention to see, does it break through here, the 101.20 area, and can it get to the 150? But, as I said, it's going to be time to get away from the September dollar index. I've already moved to the December euro. The market, I don't think, is going back to the lower Bollinger Band. Today you had Miss Lagarde come out, the European Central Bank president, and explain her position. They cut interest rates by 25 basis points. There's always the threat from her, you might not do that again. Always, okay? They're weak. They're going to be cutting. And they cut the refi rate very quickly, 60 basis points. That's a lot. So I think the market's looking at that, and their cycle's a little different than ours. They've been rate cutting. Sooner or later, they're going to see the benefit of it. Got what I'm saying? U.S. hasn't done it yet. Now, the cash markets are doing it. So one argument could be, well, Ira, but in the real world, a lot of that's being seen. Example, mortgages at 6.2% now, according to Freddie Mac for the 30-year standard mortgage. That's a new low. Remember, we were just over 7%. But you got to get under 6 probably. That's going to be a magic number, I think, and that'll bring the buyers out. But I'm looking for that to be a resistance point in the market. The British pound, Well, it tried to get to the Bollinger Band, couldn't quite get there. So its battleground in the D's contract, you're right at it. The trend is still down. You'd have to get up and over this. But I think the market is going to sit here for a little bit and fight a big battle. When we get to Bitcoin, well, it's a short covering rally. There's no question you're outside of the downtrend. But I see, like we did in so many of the stock indices, the 18 and the 200-day average together there to offer some potential resistance. And as I said, I'm a bit surprised that we haven't dropped more in the Brent or the Rebob gas. This is very surprising to me that they're able to hang on with any of the gains here. And as we take a look at heating oil at this point, now the market slipping back a little bit, but still up. It had the rally off the storm. Is it going to lose the embedded reading? If it does, can't be short anymore. Same in the gasoline. But right now, they're fighting, right, to see if they can lose it. If they start down again and take out today's lows in these markets, I think you'll be at the Bollinger Band before you know what's going on. At least that's my guess as to what the markets might want to do. In the natural gas, well, we went back to the Bollinger Band. We're just marching back and forth. Understand what's going on. Bollinger Band, Bollinger Band, Bollinger Band, Bollinger Band. They're just making you do the wrong thing. They want you to sell the rally, and you're just praying that that'll stop the market and take your profit here and buy this and hope that it keeps going. Generally, that gets you in trouble, but every now and then it works. You know, a broken clock is right twice a day too, so that's the way to look at it. With that, I want to remind you that if you like what these indicators do, you can get them if you're using TradingView or one of our charting programs. But in the TradingView, we've built a suite for traders. You don't have to be my client, but you go to my website, iraepstein.com, and under Client Resources on the top right, it's there. That's what you do. There'll be an icon that you've seen all along here. You can click that. It'll take you there as well. You sign up, and then we turn this on. You then log out of your TradingView. You go back in. You're going to have my window envelope, slow stochastics, my version. Even Bollinger Bands, my version. I use a bit of a different average that they use and that people often do. This pairs with my morning videos, exactly what I'm doing, with all my charting courses exactly as well. You can get all the different configurations, different type of charts, backgrounds. You do what you want. I mean, it's everything you've got. Takes 2 slots on that. How do you get it again? iraepstein.com. Go to Client Resources on the top, or move your cursor up here. I'm Ira. Thanks for watching. I'll catch up with you all first thing in the morning.